Hello everyone and welcome back to today's morning report chart appraisals on Monday the 12th of January with me, Rich Perry, market analyst at Tech Markets. Let's move on to euro dollar. Again, there's a bit of a turnaround that has been seen. Euro dollar not as bad as necessarily cable, or specifically, I suppose the Kiwi dollar that has had a sharp rally, fall away, but the euro dollar has also fallen away. The euro dollar, I've been talking in the last few days about this prospect of a technical rally going on, and that started to come through Friday and also early this morning. But that rally that we saw early this morning, this is on the hourly chart, and that was the reaction from non-farm payrolls. We actually saw a support coming in and then quite a solid rally off that key low that came in at around 1760, and then quite a strong rally, which took us back up over 100 pips to the upside to $1.1870. Interestingly, though, 118.70 is a fairly strong number because 118.75 was an absolutely crucial old floor from 2010, and that seems to have sort of been the ceiling of resistance on a couple of times, actually, interestingly enough, over the past 12 hours or so. And that the reaction as the Europeans have come in is to sell the euro. Now, does this now mean that this technical rally is over? My opinion is that technical rallies, certainly on the euro, are not going to go as far as maybe you'd expect them to go before the sellers try and return again. As I said in the in my main report, there's this suggestion from CNBC sources that the ECB is ready to initiate quantitative easing. So that certainly has sort of dragged sentiment away from the euro in that time. But is this the end of that technical rally? It may well be. To be honest, it certainly hasn't really taken on too much of momentum to the upside before the selling pressures come through. However, I suppose whilst the support around 1760 and the actual low is 1753, which was the 8th of Jan low, but whilst these two lows are intact, then you could hold on to the prospect that it could be just a consolidation. And then you'd be looking to sell in that consolidation. I mean, if you look on the hourly chart, you've got this MACD crossover, which is negative. You've got the Stochastics crossover, sell signal confirmed, which is also negative, and the Stochastics falling away. So it certainly suggests that near-term momentum is negative. And perhaps you'd now be looking at using sort of rallies as a chance to sell, because certainly medium to longer term, I mean, euro remains incredibly weak and negative on the technicals, and any sort of rallies would be a chance to sell. Maybe we have seen the rally. It's not been not been a great rally, and certainly the RSI on the daily chart that hit a low of 21 still hasn't even crossed above 30. So it certainly looks as though the bears remain firmly in control of this one. But it certainly seems that also that the selling pressure, as the Europeans have taken over trading today, has gathered to the downside. You'd look upon that 1870 as your key line of initial resistance, and also around 119 big figure. It's sort of 119 figure is sort of the old lows that you've got here. They do come in slightly below that 1880, 18 if I can get it. 1886, and slightly above there, and the reaction high got actually to 1896, but I'd say 19 figures probably around about where you'd say is a fairly decent area that is the initial key resistance. So a couple of levels for you to work with, but it certainly looks like the technical rally on the euro looks to have run out of steam already. Anyway, I wish you good luck in your trading today, and I'll speak to you later.